Hello, my name is Garrett. I am your local tax guy. Today I want to talk about the top 5 questions that we get asked all the time as accountants for creators. So without further ado, let's jump right into it. Okay, question number 1. The one we get asked probably the most often is, do I need an LLC? So my general response to people when they ask me this is no. That by default, you do not need an LLC. When we're talking about deducting expenses on your tax return or reporting income, you don't need an LLC, generally speaking. So what oftentimes happens is people go out and get an LLC without knowing that it's probably going to be taxed on a Schedule C. It's going to be reported on a Schedule C, regardless of whether you have an LLC or not. And the reason for this is, if you're a single member LLC, the IRS basically disregards that LLC entirely and still requires that you report your income and expenses on Schedule C of Form 1040. So whether you have an LLC or not, you are still entitled to the same deductions. You're required to report the same income, regardless of the LLC or having the LLC or not having it. Now, there is one exception, and that's if you have an LLC and you make what's called an S election. That means you want to be taxed. You want your business to be taxed as an S corporation. We'll get to more of that later because that pertains to another question. So we'll get to that later. But for now, just know you do not, generally speaking, need an LLC. I would like to quickly state that there are general business purposes for having an LLC. For example, if you have an LLC, it is oftentimes easier to open up a business bank account to separate the funds for your business and the funds for your personal. We don't want to commingle funds. And then also another thing would be to separate legal liabilities. So for example, if you have an LLC and you, in the ordinary course of business, you make a mistake, you end up getting sued, whatever the case is, the business will get sued and your personal assets are still protected, provided that you're doing everything you're supposed to do from a legal standpoint. That can be another benefit to the LLC. So for tax purposes, you do not need an LLC, though there are still, generally speaking, a lot of pros to having an LLC. The question we get the most is, do I need one? And the answer to that is no, you don't necessarily need one. We have to take into account a lot of different items. Most of the time you don't need one. Question number 2, and this one takes several forms, but generally speaking it comes across as, do I need to file a tax return? A lot of times it is, what even are taxes? What is going on? I don't know anything about taxes. Can you help me? I don't know anything. So we're gonna keep it pretty simple here and go with, do I need to file a tax return? There's a quick and easy answer to this. Generally speaking, you can look at whatever the standard deduction is for that tax return year. If the amount of income you earned is under that amount, you do not need to file a tax return. So for example, in 2021, the standard deduction was $12,550. So if your income was under that amount, you didn't need to file a return. Now, I'd like to say one caveat to that is you may want to file a return anyway. For example, if you received wages of $10,000 and your employer withheld $1,000. Even though you're not required to file a tax return, you may want to file one anyway, because the standard deduction at $12,550 is going to wipe out the $10,000 that you earned, which means you don't owe any tax, but you did pay in $1,000. So you want to go ahead and get that refund. Where we see this come up a lot is when we have students who are in college and they may work a part-time job and they're not sure whether they should or they shouldn't. Or we have a content creator, they're just now receiving a 1099 from Twitch, YouTube, Facebook, wherever it comes from, plus they work another job, maybe another W-2 salary job. In this case, they don't know whether they should file or not. It is best to consult a tax accountant just to see. Okay, I'm back. I'm in a different shirt. I'm actually in different clothes altogether. I ran to the gym. I am back now. And I want to talk to you about question number 3 that we get quite a bit. And this is, what expenses can I deduct? I'm going to keep this pretty short and sweet. The only consideration, the main thing before I get to the expenses themselves, the only thing you really want to think about is your business a true business, or is your content creation journey, is this a hobby? So a hobby versus a business. There are two distinct ways to handle these. With a hobby, it is just that. What you do have to do is report the income. You do not get to deduct your expenses, but it is not subject to self-employment tax. I'm going to get into that in another video. I don't want you to think too much about that. If you're only making a couple $1,000s, you may want to consider, this is probably just a hobby. But if you are operating in a business-like manner, you plan on growing it, perhaps you've made a decent amount of income, you're probably looking more towards a business. Now, the good thing about the business is you can deduct your expenses, but unfortunately, you can, you're subject to self-employment tax. That's the downside. In order to minimize the self-employment tax, in addition to the income tax, you get to deduct your expenses, like I said. So let's go through the expenses. Deductible expenses include your electronics, so like laptop, computer, controllers, PS5, Xbox, so on and so forth, whatever you're using to create content with, camera, all that good stuff. I feel like that's relatively obvious, but it includes those things. Also includes basically general office stuff, so your desk, your chair, the lighting in your office used to, obviously light you when you're recording, supplies, internet and utilities. Now those get into home office deductions. That can be kind of tricky usually, but just know it's generally speaking deductible. It's just there's some more calculation that goes into your utilities. Other expenses that are deductible include, paying for editors, paying for software that you use. Also, I get this one a lot. This is one I guess a lot of people think about, but they're not really sure whether or not it's deductible. Subscriptions that you pay to other content creators. I always argue that's advertising, it's networking. In the industry, it is extremely common. Now, naturally, you don't want to go in somebody else's stream and self-promote. I'm not saying that, but if you are streaming, you're subscribed to these other channels, a lot of times it is for networking purposes. Finally, somewhat of a catch-all, not really a catch-all, but the IRS has guidance out there, and the IRS guidance is for an expense to be deductible, what the IRS is looking for is ordinary and necessary to your business. So if it's ordinary in the course of business in your industry, if other people are doing it, and if it's necessary. So if you have to do it in order to run your business. If you take a look at the background, so everything you see in my background currently is deductible. So there's nothing there, the decor, the lighting, all that stuff, deductible. I'm deducting it on my tax return. I would not be a good accountant if I didn't say most of every item that I've listed is really just a probably. It depends, facts and circumstances matter, so it really does depend on your specific situation, whether or not you can deduct it for your business. Most of the time, generally speaking, the items that I mentioned are deductible, and it's pretty much a guarantee. It's just there are cases where that may not be the case. So always consult your tax advisor. So talking about expenses, that is a great segue into question number 4 that we get all the time, and that is, what should I be using to track my expenses and my income? I highly recommend tracking it with something like QuickBooks or Xero. So these are bookkeeping softwares. Tracking your income and expenses using one of these softwares, be it QuickBooks or Xero, it should be pretty easy. I will say it can get complicated if you're not sure what expenses, again, count as deductible and what doesn't. This is where an accountant can really step in and help you out, because not only are accountants, generally speaking, good at advising on from the tax standpoint, but we have to work in these softwares pretty much every day. So by combining both of those items, we're always looking at your books from a tax standpoint. We can also, a lot of accountants will look at it from a financial standpoint. So doing things like forecasting, cash flow analysis, stuff like that, that will oftentimes get lumped in there with it, but it could also be an extra service that you have to pay for. At its base level, all we're trying to do is track income and expenses. I would set up a Xero account or a QuickBooks account and just go from there. If you're really trying to bootstrap your way through content creation and you may just be starting, what you could do is use Microsoft Excel. Oftentimes, larger as the stream grows, or as your content creation journey, as you progress, you're going to look to get away from Microsoft Excel because it's very reliant on manual data entry, and we don't like that because it invites too many errors, the opportunity for errors. So what we try to do is we use a bookkeeping software and get everything coded so that when tax time rolls around, the books are already done, we can close them and then file a tax return very easily compared to what it would be like if you weren't tracking these items at all. Okay, finally, what is an S corporation? That is question number 5 that we get asked all the time. What is an S corporation? I'm going to be very quick because I could have an entire separate video on S corporation versus LLC and everything that goes into that. But really quickly, that LLC we discussed previously. What happens is if you're the sole owner of the LLC, you are considered a sole proprietor. You file your business and income expenses on Form Schedule C, which flows through to your 1040. In fact, it's a part of your 1040. An S corporation is a completely separate, a completely different animal. By taking that LLC and making what's called an S election on Form 2553 with the IRS, your business becomes an S corporation. It has its own separate return, Form 1120S. Now, when you complete that return, you get a Form K1 from that return, and you take what's on Form K1 and put it on Form 1040, which is your personal return. So that S corporation, all the income and expenses still flow through to Form 1040. It's just not a literal part of Form 1040. You now have two separate tax returns. That's okay. There are administrative expenses for that. So for example, you're going to pay an accountant to do 2 returns now instead of 1. Naturally, if you're an S corporation, you're going to need to keep books. I would recommend you need to have a separate bank account. There's just much more that goes into it. It doesn't mean it's any more serious than a Schedule C. It just means that once you have it, you have to do these things. Whereas on a Schedule C, you can still get away with not doing them at times. Still highly recommend for a Schedule C, but for an S Corp, you have to have it. So what is it? Why would somebody want to do it? The main reason somebody would want to do it is to separate out self-employment tax. What I mean by that is, going back to Schedule C, once you get to your net income, let's call it $50,000, that entire $50,000 is subject to self-employment tax at 15.3%. Those are your FICA taxes. If you have an S corporation, the IRS is going to recognize you as both a business owner and a business employee. So because you're the owner and the employee, you now get paid 2 ways. Owners receive distributions from the business. Those distributions are tax-free. So after you make all your income for the year, that $50,000 you made, let's assume you have $50,000 in the bank, you take $50,000 out as a distribution because you're the business owner, boom, that is ultimately tax-free. Now you still have to pay tax on the $50,000 as income, but you do not have to pay self-employment taxes on it. On the flip side of that, you're also the employee. So how do employees get paid? They get wages. So let's say instead of taking it out as distributions, you pay yourself a salary of $50,000 in wages. Now, those wages are subject to FICA tax. That's Medicare and Social Security. So you're probably thinking at this point, I will probably just pay myself completely as an owner and I will not pay myself as an employee. The IRS has already thought of that, and they know that that's what people would prefer to do. So they're going to basically say that you must have reasonable compensation as the employee. In summary, if you're considering an S Corp or anything like that, you definitely need to hire an accountant to look into that, because there are quite a few S corporations that are established that don't need to be. You just end up paying a lot more in accounting fees and maybe even legal fees than you need to pay. And also, if provided an audit, something like that were to come down, it's just a lot easier if you don't have to go through all those hoops. S corporations aren't meant to be scary. They're actually when done appropriately, actually quite easy, and they do a very good job of separating everything out. But you don't necessarily have to have one, and that goes back to the LLC versus no LLC. It falls under the same category. You don't necessarily need one. When you do need one, you should relatively know. You'll know that you're making enough income to already be having these conversations with an accountant. Hopefully you already have an established relationship with an accountant by that point, and hopefully the accountant brings it to your attention and says, hey, we may be able to save you a little bit in self-employment tax by going this route. But in summary, that's an S Corp. So with that, I want to wrap up this video. I appreciate you hanging out and listening to the top 5 questions that we get asked all the time as accountants for creators. If you like this video, obviously like and subscribe down on the bottom. I really appreciate you listening in. If there are any other questions or anything like that you may have, obviously leave a comment down in the comments below. I would love to get back with you guys and let you know my thoughts on anything related to accounting and tax in the in the content creator space. So with that, again, thanks, and we'll see you in the next video.